Breaking news here on Martyn Lucas Investor. The best news ever on the Robinhood app. And I'm going to show you exactly how it works. And you'll know that because you would have tuned in to my X and Instagram where I posted this statement that I was going to cover it into today's show. What is this? This has just come out about half an hour ago. I said I would cover it in today's show just before Sensei joins us, and I will cover it. I'm making this during a live show, so anything can happen. This is the biggest moment from Robinhood since the app was created. Why? Let me explain why, what this does, and how it works in the best way for you. I'll give you a real life example. Robinhood, up to today, has simply been no more than an app where you can buy and hold stocks. No more, no less. It's not and never was until today a trading platform. Yes, you could trade. You can buy and sell your shares all you like. But the reality is you'd probably be losing more often than you know. What do I mean by that? We all made the mistake. I made the mistake when I tuned it when I first came on to Robinhood. Other apps, not all, have a lot system like Robinhood does finally today. Robinhood didn't. Robinhood was purely a buy and hold, then sell app. What I mean by that is if you buy a stock over time, it generally goes up and you sell it or some of it and you make a profit, right? Okay, that's called the FIFO rule. First in, first out. So what you bought first is likely to be the lowest. And as you buy more, they go up in price. So you're always selling for profit, okay? However, that doesn't work very well if the price goes down rather than going up. You see what I mean? Because Robinhood was basically a buy and hold app, not a trading app. Today, it's put its big boy pants on and become a proper full-on trading app. Because now we have lot selling. Released today for the very first time. What that means is you can now sell individual lots for tax advantages or realized profits. This is a huge deal. Up to this point, you've been selling and not knowing which stocks you're selling. You should know you're selling the first ones first, as in the FIFO rule, but many of you don't realize that, and sometimes you're selling for losses when you don't need to be, and you've not calculated how much tax you'd pay, and it's all a bit of a gamble, all a bit of a guess. It works fine if you're buying over time and selling over time, but if you're in and out trading, you're making loads of mistakes on Robinhood, and there's nothing you can do to avoid it, other than send them an email every time about the lot you wish to sell, and that way you can do it, but no one does that, all right? So this is a big deal. Many of you have been losing money, and now many of you are going to make money for the very first time in real terms, not in just you think you've made money, okay? So, very, very important. If you tap the like button, I'm going to explain more how it works before we bring Sensei on. And consider subscribing to our channel as well. So, FIFO rule means first in, first out. So, whatever stock you bought 6 months ago, a year ago, is what you're selling first. And they go from the bottom of the pile and they work their way up. Okay? But you couldn't choose if you wanted to sell for a loss or sell for a profit. Maybe the stock you bought today had gone down. The price had gone down and today's stock was the lowest one. That's the one you wanted to sell rather than the one you bought 6 months ago, which was up. Maybe the stock has been falling. You don't want to sell the one you bought 6 months ago for a loss. You want to sell the one you bought today because it's much cheaper for a profit. Or maybe you do want to sell for a tax loss, but you don't know how much tax you need to save. The whole thing was a bit of a game and a bit of a mystery. Well, that's all going to be cleared up for you now. So let me explain what lots is, and then I'm going to show you in real terms what it actually means. So if we open this up, I'm opening this up with you live. Learn more. Introducing tax lots on Robinhood. Now you can see here, this was on their website December the 2nd, which was 18 days ago, but it's not been on their app until today. This is brand spanking new. At Robinhood, we're committed to making investing more accessible and transparent for everyone. That's why today we're introducing an important feature designed to help customers manage their tax liabilities and give them flexibility when selling lots, stocks, tax lots. It's not just for tax though. It's selling stocks for profit as opposed to stocks for losses as well. So it's a lot more than just that. They're kind of glossing over that because people will suddenly realize they've been selling stocks for losses for ages and not actually realize. Tax lots allow customers to choose specific assets to sell. In other words, you buy 20 shares of Robinhood over the last year, 1 today, 2 tomorrow, 5 last week, 20 last year, I don't know, different points. They are all individual lots. When you sell, you're selling whichever lot you choose. As before, you're selling the first one that you bought, and that may have been a profit or a loss, depending on how the stock has moved. All right? Whether it's the ones held long-term, so now you know over 12 months, you pay less tax on those, or the ones with the lowest or highest cost basis. Great. Now you know the ones that are in profit or ones in loss for whichever reason. Or the ones that might have experienced the greatest loss. This gives customers the ability to make more informed decisions and manage their tax bill. Very, very important, all right? How tax lots work. Tax lots will be available to all customers when they make a trade on the app. When using the feature, customers will be able to view the individual lots and make up their positions and select which ones to sell when executing a trade. For example, if you bought 100 shares of a stock in 2 separate transactions at different prices and you want to sell 50 shares, Robinhood now lets you choose the lots to sell. Okay, I'm not going to go into any more from Robinhood because I'm explaining it in a way that's I think makes it clearer anyway. So we'll come out of there, and what we'll actually do, we'll clear that away now. We don't need that anymore. I will actually go and demonstrate what I mean. So I'm not going to do it in real. I'm not going to complete the transaction because I don't want to sell, right? But let's say, and by the way, this doesn't work for crypto. This works for shares, individual shares or groups of shares or ETFs or whatever. Let's say I want to sell VU. Well, as you know, I've now got $250,000 invested in VU, and I started buying back in January, and those are all up because the stock has gone up since then. However, there was some I bought yesterday on the FOMC report on Wednesday that still haven't quite got up to those levels yet. Everything I bought overnight is up. It's been my biggest ever gain today, made nearly $6,000. But so not all of my gains have been up at the moment. But let's say I want to sell for profit, the maximum profit. I'd like to pay down some margin. So I want to sell for profit. I haven't got any tax to pay this year because I'm under the threshold, or I got a tax rebate last year. So if I sell today, and this is actually my case for real, if I sold today, I wouldn't pay tax on it because I've actually got on paper a tax loss this year. So I can actually sell this year right now up to $8,000 because on paper I've lost $8,000. Profit, tax-free. It's good, isn't it? You see the power of this? I've got a tax loss this year on paper of $8,000. I know that because if I look at my realized positions on here, if I go down here, I think it's down here. There you go. Realized profit this year, tax loss, $8,943. I've lost money on paper. Did that on purpose. That way I'll get a tax rebate to offset what I've earned with YouTube. Thank you very much. However, because I've got a loss, I can afford to sell some stocks for profit and pay no tax because it will balance itself out. Make sense? Makes sense, right? Okay, I'm sure it does. So I could sell now, but I have to sell the right shares, not the ones I bought yesterday because they would be a loss. I don't want to sell for a loss. They've not made me any money yet. And I don't need to sell for a loss because I've already got a paper loss. That would be stupid. That would be like loss on loss. You know, what's the point? Didn't achieve anything. So what I do is I go down here and I decide I want to sell a share of the S&P 500, one that I bought right at the beginning for a profit and pay no tax on it. Fantastic. Woohoo. Free money, free gains without paying tax on my main account. How smart of me is that? It's very smart. This is why this is the way you have to invest. You have to do the whole thing. So I'll click trade. Now bear with me, folks. I'm not actually going to go all the way through. I'll click trade. You can't quite see that. It's off the screen at the moment. Let's go sell. Sell. There you go. I want to sell. What you have to do is click shares. You have to click sell in tax lots. If I just click sell and be lazy, I will sell a share and I will sell the one I bought at the beginning of the year. And that's absolutely fine because in this case, that's what I want to do. But if I wanted to lose money, I would have chosen to sell one from yesterday that hasn't made a gain yet. I don't want to do that, do I? I've already got a tax loss. I want to sell a share for free and have no tax implication because I've already got a tax loss. This is real profit and hold the ones I've just bought to make profit in the future. That way I have more cash to pay down my margin. So we click sell in tax loss. Tax lots. From here, I can choose which one I want to sell. Bloody marvelous. Scroll all the way down to when I first bought the S&P 500. January the 15th. Can you see right at the bottom? I paid $463, $436. Marvelous. And you can see it tells me that those 4 shares, if I click those 4 there, I am going to make $433 profit. Woohoo! Tax-free. How about it? How about it? I'm reducing my margin and I'm making $433 profit, but I'm adding a lot more into my account. I'm adding a grand total of, at the bottom of the screen, you can't see this, it's off the screen. It says, I'll be adding credit to my account of $2,178. Nice, straight off my margin, saving me 5.25% because I'm now paying 5.25% because I've got the lower rate of interest. And I'm getting $423 in real profit without paying tax. Brilliant. And then I click done, I click sell, and we're out of here. If I wanted to sell for a loss, for whatever reason, I could go to the top and the ones I've just bought. So hopefully that now explains how that works. I think everyone would agree Robinhood today has come of age. That makes Robinhood even better. And that was a real life example in my real life situation with my real shares. This is being made during a live video. Sensei is now on the line. He's about to call in. Click above my head for all the links. Down below in the description. Over here, I'll put the Robinhood playlist. And down here, I shall put my latest masterclass on investing down here. I've just recorded my second part of my masterclass for investing. You need to know how the whole market works, not just a bit of it, but the whole of it. Down here, you will see my masterclass video part 2. Until next time, as always, take care of yourselves and each other. By the way, underneath in the description, you will find a link to, and I'm going to give it to everybody live right now, Robinhood USA link. Everyone gets free Robinhood shares, or Robinhood UK. I've put that in the link in the chat and below in the description. Everyone gets 5 free shares of Robinhood UK using my referral. How about that? Above my head, down here, over here, down here, masterclass part 2. Take care of yourselves and each other.